Hey, what's up, everybody? Tomorrow, Wednesday, February the 1st, 2023 is going to be another big day for the markets. The stock market, silver and gold. Tomorrow is when Jerome Powell is going to take that podium once again for the 8th time. He did it 7 times in 2022, and this is going to be the first time in 2023 where he is going to announce how much he is going to increase the federal fund rate by. 7 times in 2022, and this will indeed be the first time in 2023. Will it be 25 basis points or will it be 50 basis points? I do believe the markets think it is going to be 25 basis points, and so do I. Now the question is, what is he going to indicate after he increases rates? If he increases the federal fund rate by 25 basis points, then comes the press conference. But the question is, what does he say following that increase? In my opinion, that is what's going to move the markets one way or another. What will be his forecast going forward with future increases? Will he have one more increase in March, or is he going to have 2 more increases in 2023? And then wait it out, and then start possibly his pivot in 2024? That is the question that everybody is waiting for, and you better believe that that's going to be the question that he is going to have to answer tomorrow when all the people in the media is going to be asking him questions. The question is going to be, when are you going to start decreasing the interest rates? Every time Jerome Powell takes that podium, because I've watched every one of those press conferences, and there's been one common theme, and that is he wants to get inflation down to 2%. And he said that the Federal Reserve is going to do everything in their power to get inflation back down to 2%. He also talks about softening the labor market. Speaking of softening the labor market, I do want to reference something here that Bank of America said. This comes from Yahoo Finance, and I have to get a shout out to Nick's Coins because she commented on one of my recent videos that Bank of America is warning the U.S. economy will begin to lose 175,000 jobs per month in Q1 of 2023, which is what we are in right now. Expects a harder landing than a softer one. Here's why. Now, every Jerome Powell press conference, he always says softening the labor market. And in my mind, that means jobs. Here it says, the latest jobs report shows that the U.S. labor market is in decent shape, but Bank of America sees trouble looming in the distance. In December 2022, total non-farm payroll employment rose by 223,000, beating economists' expectations of a 200,000 increase. It also means that America's job growth is heading into the right direction. Bank of America, however, expects non-farm payroll gains to turn negative this year. During the first quarter of 2023, the bank projects that the U.S. will be losing roughly 175,000 jobs a month. And that's not just the labor market that's going to take a hit. We're looking for a recession to begin in the first half of next year. Bank of America's head of U.S. economics, Michael Gapin, told a CNN reporter last October. The premise is a harder landing than a softer one. Gapin expects the Fed to remain hawkish. According to the Fed's latest projection, Federal Open Market Committee participants have a median forecast of 4.6% for the unemployment rate in 2023. Gapin, on the other hand, sees the unemployment rate in the country rising to 5% or 5.5% this year. I would also like to reference a little bit from a CNBC article because recently the GDP numbers came out, and this article says U.S. GDP rose 2.9% in the fourth quarter, more than expected even as recession fears loom. Gross domestic product rose at a 2.9% annualized pace for the fourth quarter, slightly better than expected. The U.S. economy finished 2022 in solid shape, even as questions persist over whether growth will turn negative in the year ahead. Fourth quarter gross domestic product, the sum of all goods and services produced for October to December period, rose to a 2.9% annualized pace. The Commerce Department reported Thursday economists surveyed by Dow Jones had expected a reading of 2.8%. The growth rate was slightly lower than the 2.3% pace in the third quarter. Consumer spending, which accounts for about 68% of GDP, increased to 2.1% for the period, down slightly from 2.3% in the previous period, but still positive. Inflation readings moved considerably lower to end the year after hitting 41-year highs in the summer. The Personal Consumption Expenditures Price Index increased 2.3% in line with expectations, but down sharply from 4.8% in the third quarter. Excluding food and energy, the chain weighted index rose 3.9%, down from 4.8%. While inflation numbers indicated price increases are receding, they remain well above the Federal Reserve's 2% target. Along with the boost from consumers, increases in private inventory investments, government spending, and non-residential fixed investments helped lift the GDP number. Federal government spending rose 6.2%. Well, a big shocker there, huh? And then the article goes on to say a series of aggressive federal rate hikes aimed at taming runaway inflation are expected to come to a roost this year. The Fed raised its benchmark borrowing rate by 4.25% points since March 2022, its highest rate since 2007. Rate hikes generally operate on lag, meaning the real effect may not be felt until the time ahead. Let me know what you guys think in the comment section below. I'm not going to read any more of this. I'll put both of these articles in my description box below if you want to read both of these articles in full context. Let me know what you think the Federal Reserve Chairman is going to increase interest rates by tomorrow, February the 1st, 25 basis points, 50 basis points. My suspicion is Jerome Powell will raise interest rates tomorrow by 25 basis points. Although he could decide to go a little bit more hawkish and do 50 basis points, but I believe it will be 25 basis points. Then I think there will be another 25 basis points increase in March, in my opinion. Then he could decide to hold off and do nothing the rest of 2023, or possibly he will do another 25 basis point increase in 2023. So we could get 25 basis point increases in 2023, and then hold off the rest of the year, see what the impact is, and then decide what to do in 2024. Maybe the pivot starts in 2024, and that's where he starts to decrease the federal fund rate. But we're going to have to wait and see what Jerome Powell has to say tomorrow at that press conference. And we're going to have to find out, is he going to give us any indicators as to what he is going to do moving forward? And that right there, in my opinion, is key. What is he going to say? What are his indicators going to be tomorrow during that press conference? And based on what he says tomorrow, in my opinion, that is what is going to drive them markets one way or the other. Which way are they going to go? I guess we'll have to wait and find out what Jerome Powell says tomorrow, February the 1st, 2:30 p.m. Eastern Standard Time. Thanks everybody for watching. Let me know your thoughts in the comment section below. I appreciate everybody for watching. Like, comment, subscribe, share, and I'll talk to everybody on my next video. Thanks a lot, everyone.